feeling like a shark in a shrimp tank. Big fish, small pond in the shrimp tank.
Hey everybody, welcome to the Shrimp Tank right here in our virtual Shrimp Tank studios. Today we're excited to bring in a few minutes Mark Casady. I'll introduce him. Of course, I'm your co-host Ted Jenkins, sitting here with my co-host Mark Scribner. I'm in Atlanta today, he's in Boston, but it doesn't really matter. We're doing this virtually across the United States and around the world where people see us in the Shrimp Tank. Every week we get to interview some of the brightest and best CEOs all around the United States and now internationally. Shrimp Tanks in some major cities today. We're in Seattle, Los Angeles, Houston, Little Rock, Arkansas, Boca Raton, Charleston, Harrisburg, Boston, Atlanta, and many other cities and growing. Why? Because many of you have told us that you want to hear where street smarts and book smarts collide. And what way do we do that? The only way to learn is to learn from other entrepreneurs. As always, you can go to iHeartRadio. We've been growing like crazy on iHeart in the entrepreneur section. You can download our podcast on Apple Podcasts, Google Play, Stitcher, SoundCloud, or anywhere around the internet. Or if you want to see the some 1,000 business owners that we've interviewed all across the United States, just simply go to shrimptankpodcast.com and you can get all of the goods. Today, I'm really excited because a lot of times we talk to mom and pop business owners on this show, but I'm so delighted today to have on our guest Mark Casady, who's the co-founder of Vestigo Ventures, which was done in 2015. I was actually there at their offices. They have a focus on financing startups and FinTech. He's a general partner and a chairman of the advisory board. He's also on the board of several major corporations across the United States, but most notably, you probably all heard of LPL Financial, one of the largest broker dealers in the United States. He was the CEO and helped take LPL public. Have you ever taken a company public? Most of you will never do that in your lifetime. So pretty cool stuff. Pretty cool stuff. But Mark, thanks so much for joining us today on the Shrimp Tank.
Thanks. Great to be here. Really appreciate you taking the time to talk.
So I wanted to ask you just to start in here that you're seeing all these startups right now. And I just imagine, I'm even thinking about it for our own businesses, that one day we're all at work and the next day everybody's at home. How are most of the CEOs that you're working with dealing to try to maintain the day-to-day culture and the environment in the organization while still trying to drive sales results and grow top line revenue?
Yeah, I think for everyone it's massive dislocation, at least in terms of mindset, right? And their first concern is what it should be, which is how's my family, how's my health? Let's worry about the community and the impact this is going to have kind of all around us. And I think that's the right place for any of us to be at first. And then what can I do to make that better? And then from there, how do I think about my business and the impact this is going to have? Most of these are really all of them are technology startups of one form or another. So working from home is actually part of their playbook already. And the key is to help them with thinking about how to change that environment a little bit when you're working from home, so you stay connected and stay aligned with your team. But for the most part, they've really rolled very well with the punches and seem to be doing fine.
Hey, Mark. So full disclosure, I used to work for Mark in my prior life at PL, and it's great memories. And Mark, you clearly were a great leader back in those days, and I know you are now. But with this environment and some of the companies in your portfolio, or just other things that you're looking at in the world, I know LPL back in the day was an industry disruptor. They made a lot of people very uncomfortable with their business model and reinvented financial services. But is there anything that, as you sit here today, you look at and say, this is a great opportunity, or you could obviously plead the fifth for that if you don't want to tip your hand, but I'm sure there's things that are being disrupted and opportunities.
Oh, I think anytime there's change of this magnitude, there's massive opportunities. There's also massive problems, but my job as a venture capitalist now is to really focus on the opportunities and help those situations where there may be problems. So for me, the first thing is it changes valuations. So investing, whether you're investing in public securities, you're investing in private securities, like we are, the prices just changed. And the public securities seem to be recovering, although that feels a little bit like, a bounce to me, because there's just so much uncertainty in the world. But importantly, on the venture side, it means that you'll be able to have meaningful conversations with founders about what real valuation should be. We've always been a valuation sensitive organization, and it's been tough in these last couple of years because you do have some people in the venture community who tend to not worry about valuations at early stage and kind of throw money at startups. So that has now ended. So that's good for us and it'll be helpful. I think anything that requires, a SaaS environment, right? Something that runs in the cloud. I mean, thank goodness we're at the point we are as a country. If I think of LPL, for example, if this had happened 10 years ago, even 5 years ago, I'm not sure you could work from home the way you can today. On a couple of boards that I'm on, these companies have something like 15,000, 12,000 employees working from home. You couldn't do that if you didn't have the cloud and that technology. So there's obvious things that companies that are essentially enterprise SaaS running from the cloud are going to do extremely well in this environment, because it's going to be part of what is a requirement of any buyer of these technologies to be able to run them remotely for this new work at home environment. Horrible for real estate, right? If you were a commercial real estate owner, I'd be worried. I've heard on the boards that I sit on, CEOs say things like, gee, if people can work from home, why am I taking out this lease for 1,000 people?
It's interesting that you said that. I don't know if you read the paper, but last week, James Gorman from Morgan Stanley made a statement that they are evaluating all their commercial real estate because by default, they've had to make their business run. But
yeah,
I would agree from a real estate perspective, it's pretty crazy.
What crises tend to do in moments of compression. This is my fourth in my career. I can give you each one of them if you want, but the last two have been interesting. Last one was a financial crisis where I was running a company that had, not yet gone public, but went public in 2010. So still had the aftermath of the financial carnage. And of course, now where I'm not running an entity, a company that's of that magnitude or scale, but you're helping, the 18 companies in our portfolio figure out what to do. What's interesting about all these is they tend to push forward trends that were going to happen anyway, right? Working from home is something that's been around for a while. Now we're really having a magnified experiment, internationally about what it truly means to work from home. And, in the US, I think we're coming through with flying colors, having been mainly a service industry already. And I think people are finding, I'm a lot more productive. And if I do communication correctly among my team, this is actually a better way to work than gathering, in one location. So I think you're going to see all those trends that were going to happen anyway, going to the cloud, working from home, the digitization of finance, all those are just going to go faster now.
When you look at a lot of small businesses, one of the major reasons they fail is they're undercapitalized. They just don't have enough money. And now we saw the first round of the Paycheck Protection Program, and then the second round now that we're in the midst of this. What do you recommend to a small business owner in trying to think forward about how to access capital? If the capital markets get frozen here, should they be focused more on dealing with the SBA? What kinds of advice could you give to a smaller business owner?
Well, the first place they should go is their bank, right? That is how the SBA administered this program. It's how the SBA would normally administer its programs. But this one was critical to be associated with a bank. And we did have a couple of companies that worked with banks that did not really have the facility and therefore could not do PPP or any other SBA lending. And we had them switch to see what was sort of the art of the possible. And those switches will be permanent. They won't be going back to that bank that couldn't help them. So first place to go is your bank, and understand what's available to you. There should be a wide variety of loan structures from the SBA to help. The PPP is probably going to come and go and then come again, meaning that you're likely to get at least a third tranche of funding from Congress. So don't give up on that yet if you haven't applied or you were somehow turned down in the first couple of them. So I think that would be a place to go. And the third, of course, is to your own investors. Most businesses usually have an angel investor structure of some type. It could be a brother, it could be a sister, it could be a parents, it could be any number of people. And there's nothing wrong with going back and saying, under the right terms, what else can we do to help get through this moment of time. And then finally, the markets on the credit side are reopening. So if the business is a bit bigger, you see a lot of very large companies, because they get the press, issuing debt and of course issuing equity. And presumably a medium-sized business can do the same. But your banker's really the best place to get started.
Hey, Mark, can I just expand on Ted's question? So like you had mentioned, you've been around with most of the major financial uh, fiascos that have happened 2008.
It's not me though. Just to be clear, it's just
No, I
that.
know. No correlation and connection. I do want to be clear on that. But you've been around that. But on the seat that you sit on now, on the VC and the private equity side, do you see any behaviors changing? Is it just people hanging on to their cash right now, or just kind of trauma?
Well, I think trauma is a great word to use. That you're seeing, whether it's investors who might normally be perfectly fine with going forward and funding something, they're definitely, taking more time to evaluate. I think there's nothing wrong with that. We're seeing some money really come off the sidelines, meaning that are coming away from, making investments and going on to the sidelines. Sorry. And you are seeing people who, see real dislocation in the market, coming off the sidelines and investing, although that's not usually in the market that we're in. So what we're seeing is generally less activity by other venture firms. They're waiting to kind of see what happens next. We're at a stage where we have 18 companies out of 20 targeted for Fund 1, so we're going to be selective anyway in that process. But we're open for business and looking for good opportunity. And we know that just based on the kind of inbound inquiries we're getting, others are not necessarily putting capital to work just yet. It depends really on your view of recovery as to how quickly that'll come back.
Yeah, sorry, Ted. Is that like on the institutional side or the ultra high net worth, or is that, how do you break that
Yeah,
out?
it's interesting because it's interesting enough. It's mainly family offices that seem to be slowing down, and I am a little surprised by that because they typically are risk takers given their long-term view. But they are wanting to evaluate and get more certainty. I think everyone, we've all become amateur epidemiologists in this process, right? And everyone's saying we've got to have a vaccine for us to quote unquote return to normal, and I'm happy to accept that. My wife and I have a foundation that just gave a gift to a vaccine group in Boston that is looking to do something kind of unusual that could actually, if it works, it would be able to produce vaccines in the billions. And we just got some press on it just recently for the institution that's overseeing it, Mass Eye and Ear. So definitely worth checking that one out. But what's important about it is that vaccine is what really denotes getting to quote unquote a normal where you're not wearing face masks and the like. I think we're also going to see, so I think families are saying, well, let me wait until I know whether that's a year away or 2 years away or 3 years away before I make commitments. And that's fine if that's what they need to do. I think institutions are upside down a bit because equities got so out of balance in terms of value. And now they've recovered nicely, but not enough, I think, for the professional investors to feel comfortable that their allocations are quite where they want them to be, is what we're hearing. And then you have others who were, had sort of correctly anticipated a concern about something changing in the environment and were more conservatively positioned. They're the ones putting money to work now.
Mark, we just saw in the last 5 weeks, 30 million Americans unemployed. And obviously they're going to want jobs again, and hiring and retaining talent is such a hard part for a lot of businesses. If you're a small business owner now, how do you go about, you think, trying to get some of this talent that might, because sometimes talent's in short supply, and not everybody that lost their job was an untalented person. There are a lot of talented people that probably lost their jobs. How would you try to recommend going at it as a small business owner to find this talent and bring it in? Because it is, getting the right talent on the bus is always a big part of building a good company.
Well, we have a company that is based in New York and is looking for a chief marketing officer. It's for a company that does both employee benefits and business with consumers in the pet insurance space. And they were having a very hard time prior to COVID to getting attention to their desire to add somebody. They'd get the occasional inbound. They'd try to call out to people that they knew were good, and they just weren't getting interest. And almost as quickly as this happened, within a couple of weeks of it, they were starting to get real inbound. To their job, placement. So I think if you go to the normal sources you go to, for placing jobs in the marketplace, whether it's Glassdoor or LinkedIn or Indeed or whatever the right source is for your business, you're going to find there's just a lot more people available, and frankly at better prices. The only area that we're still seeing a lot of tension is in engineering. Engineering talent and data scientists are in demand. It doesn't matter about displacement. And in fact, in companies where we've suggested things like, taking base salaries down, where that's an appropriate response to the squeeze that's going on, you just aren't able to do that with the engineering or data science talent. So that tells you that that market continues to be very strong and probably will continue to be tough to recruit from. But every other category, will likely be much better. And so it's great for those who can to get out there and find the right talent. As you say, it's critically important to their success, but it will be much more prevalent. This is really going to hurt the lower 20% of our economy. The folks who we work with at, restaurants and even grocery stores after this rush is done, and getting those businesses back to health is going to take a while. And so that's the part that's, really tough socially. It's going to have a big impact, but it will be a good opportunity to be building businesses, I think, and a good opportunity to bring talent on board.
Hey, Mark, a little while back, I think it was last year when we were in your office, and
yes,
you made a comment about the many thousands of business plans that cross your desk basically every year, and how could you maybe talk just a little bit about how when you look at all these business plans that come in, like how do these things rise to the top where you're like, hey, I'm interested? And I think you've mentioned that it always starts, and correct me if I'm wrong, but it always starts with good management, good people. And builds off of that. But maybe could you discuss a little bit about that and the business plans and those submissions?
Yeah, happy to do so. So there's really three critical things in the pitch, right? One is the team, as you said. I'll talk about that in a moment. Second one is, how big's the market? Is this a big market or a small market opportunity? And the third is, what's the technology behind it? We're going to be concerned about that because we're investing in technologies in financial services that can, make a difference around two key themes. One is driving down costs, and the other one is delighting clients, right? Those are our big themes of what's happening in financial services. So we're going to look for that as the core pitch to the business idea. So is it a big enough market? What's the core pitch and the team? The team, I'm surprised by the number of plans we receive in which they spend a lot of time on addressable market, or TAM, and very little time on the team. And if I were me, I'd start the deck with the team. That's how we do our deck when we're out talking about the fun, because the experience of that team, the way that team's culture is built, how the team gets along, its interaction on a Zoom call or in person matters a lot. And importantly, the experience of the team, counts for everything. Is this their first startup? Is it their third startup? Makes a big difference. And a lot of pitches have, at best, kind of a LinkedIn profile, and that's just, not sufficient.
Right. It's really interesting, Sibby. You're exactly right. There's so many people, they don't get the loan or they don't get the investors because they just simply don't have the right business plan. Now, I know that you're super big in the FinTech space, and obviously the whole delivery of payment system has changed with things like PayPal and Venmo, and people hear about SaaS models, and then we recently heard about HaaS models, the hardware as a service. But recently, I've been seeing more things coming out about what they call to be a TaaS model potentially, and this idea of token as a service or cryptocurrency. Do you see with everything going on with obviously the amount of debt the United States has and Europe has, and God knows how much debt China has, they don't really know. Do you think that cryptocurrency will ever really be mainstream from all the things you see in FinTech?
Well, in our portfolio companies, we have 18 total, 3 of which are infrastructure plays in the crypto market. So our belief is they will become an alternative asset class, and we do believe that tokenization of traditional securities will occur. I think our belief is correct. I think our timing is probably a little faster than what's actually happening in the marketplace. And these displacements help and they don't help in that case, right? Because they get you to worry about things like you described, which is the government in the U.S. is printing an enormous amount of money, which can only lead to issues in the future. And a cryptocurrency, by definition, Bitcoin, as we all know, essentially has a limited supply. And so it should therefore not be subject to the same dislocation or devaluation that a fiat currency would have. So I think people are going to put a small amount of crypto into their portfolios, and it doesn't take much of that, right? If they put 1% in or half of 1%,
right,
across retail assets in the U.S., that's a lot of money, no matter how you look at it. So I do think it'll get there. I think it, I would have said it was going to get there in 5 or 6 years. Maybe it's more like 8 or 9 or 10, but it'll eventually get there. And if it's not the cryptocurrencies as we know them today, Ethereum, Bitcoin, and the like, it's going to certainly be tokenized securities that represent an ownership of a building or a piece of art or an equity, because there's two things about tokenization that really help. One is it allows you to have very small amounts of money that can get diversified, by having that ownership, and it lets you create what sometimes people call a DeFi world, the deconstructed or disintermediated finance. So let me give you an example. Boston's a very expensive condo market. I think even after COVID, it's still going to be an expensive condo market because there's only so much land here, right? And there's only so many units. And let's say you buy a $750,000 condo and it's your first purchase, and you've got to put 20% down. So there's $150,000 out the door. Now, I might feel fine about that, right? I've made an evaluation of the neighborhood and the condo, and now I've got a $150,000 bet it's going to go up. But what if I instead said, hey, I'll take a $100,000 bet on my own condo, but I'd like to take $50,000 and tokenize it across all condos in the US, right? Or all condos in major urban areas, or all condos globally. If you had tokenized assets, you could do that cost effectively. Today, you can't do that cost effectively. So you'll have all sorts of reconstruction of our chain of value or the way we think about the portfolio effect because of tokenization. So we're big believers tokenization is going to occur. We've looked at probably 4 or 5 companies very closely, but have not invested in a tokenization platform because it just feels too soon. I think it's going to take more on the nature of 10 years for tokenization securities to come around.
Let me ask you, just because it's not often on the Shrimp Tank, we get someone that had so much financial services experience like yourself, that, in this industry, obviously it's changing as well. And you have traditional firms that do, well, they did, and they may still a lot of face-to-face business in the high net worth space. And you have the robo advisors like the Betterments of the world. Do you think with what's happened here recently that we'll end up with one of these virtual advisors where there's a model where people literally have Zoom meetings and share their finances, and this is the way that it's constructed to help somebody manage their family financial plan?
Oh, I think any kind of video or Zoom type structure will work very well for that. Most advisors have a meeting once a year at best in person, and then it's usually phone calls or emails between that, and now text. And there's no doubt that if you look at the millennial population or younger, they much prefer to have interaction that's more like what we're doing here today on Shrimp Tank. And so I think this just pushes forward a trend that was going to happen anyway, and probably makes, frankly, my generation of baby boomers more comfortable with the technology because they're doing this with their grandkids and they're doing this with their children. And,
Right.
and now they realize, hey, this is as good as going. And guess what? I don't have to get in the car and I don't have to drive.
Or get sick.
Right? It's just so much easier to do this. And so, imagine a world where you were able to socially mix, right? We certainly I miss our friends. But boy, life would be just about perfect if I didn't have to drive somewhere to do something, and I could just drive when I want to go out to dinner with friends. So it's easy to imagine this trend continuing for financial advisors. I don't think it changes the core nature of what advisors do. In the end, the very best advisors really worry about the meaning of money, not the management of money, and they really get to the core issue that their client has, which is, how do I want to pay for the kids' schools? Do I want to pay for part of what this kids' schools are going to cost? How do I value that as a family, right? Am I charitably inclined? Am I not charitably inclined? Did I grow up with plenty and therefore, I don't worry quite so much about, sources of wealth, or did I grow up with little and therefore almost no amount of wealth is enough? All these are psychological issues that relate to how one, kind of finds happiness around, their wealth. And of course, health is terribly intermingled with those same questions. Do I have enough to cover my healthcare needs? And crises like the one we're in only make that more pronounced. So I personally think that the technology will keep up with what humans want to do with no problem, and that we now have had a big practice session because of stay at home to really try those technologies, and now we know they work just fine, and we're likely to keep using them where it beats the convenience of what was available to us before. So I think for advisors, it'll roll right along in my experience.
I like it.
Mark, one of the many things I like about you is you're a very humble person, obviously very successful, very accomplished.
Very nicely.
At this point in your career, I mean, you could have probably just walked away and lived a great life. Like, what motivates you at this point in your life where, you know, you've had some great liquidity events and some public stuff and some amazing business opportunities, but what motivates you now?
Well, thank you. It's a great question. It's very nice of you with the premise. I always view that I'm in service to someone when I'm, you know, leading a company or in the role I'm in as a general partner. And right now I'm in service to my LPs, right, to make sure they get their kind of returns they expect from their portfolio. And I'm in service to the portfolio companies that are a part of our portfolio to make sure they get through this crisis and that they prosper as much as they can from what happens. And I love that structure. My father was a minister, and I think it always came from kind of, you know, that sense of service to the community. My mother was did a lot of work for nonprofit fundraising for the Mental Health Association of Indiana. And they have this deep, you know, commitment to service to others that is played out as much as I can within business. But for me, the other motivation has been that I love, you know, the way the world changes. My career has really been built around companies that go through change and how to help them do that. Even the boards that I'm on are in companies that have gone through change. And that's the first thing that motivates me. We are in a tremendous time of change for financial services, as exciting a time as I've ever seen. And I've been around for a while, in nearly 40 years of a career. And I've just never seen a time like this one where there's so much that can be done with technology, and so much that makes it a better business, right, as a result. So that's exciting to me. And the other thing that's always been motivating is I love meeting someone where we created an idea and then there's a job, right? So I remember at LPL, we had created this new service to work with insurance companies and their broker dealers. And I remember walking up to someone and saying to them in our Charlotte office, "Oh, hi, I'm Mark, and, you know, who are you and what do you do?" And they said, "Oh, I'm, you know, Joe, and I work in the phone center supporting insurance company XYZ." And I literally got goosebumps, right? Because that was just an idea we created in a conference room. We went out and we sold it, and then this person has a job, and it's a well-paying job, and they can, you know, afford a mortgage, and they can have a family, and isn't that cool? And in venture, it's the same idea, right? We've got companies that have grown from 2 or 3 people who are founders to 20 and 30 and 100 people, and that's what they're doing. They're creating, you know, real jobs in the world, and I think that's such an honor to be able to help make that happen.
You know, we have a lot of small business owners that listen to the Shrimp Tank, and some of them always wonder, should I get into a partnership? And I've always heard that thing that sometimes the only ships that sink are partnerships. Do you recommend for somebody to either get an advisory board as opposed to a partnership, or get into a partnership? And how would a smaller entrepreneur that has 5 or 10 employees think about that on how they get their advice? Is it better to get a partner, or is it better to get a board, or some of both?
Well, that's a great question. It depends a lot on your personality, right? I would say everybody benefits from an advisor, whether it's an advisory board, you know, something a little more formal with a variety of people on it, or whether it's a mentor, or it's just coffee with somebody who's honest with you. You know, I love to both receive feedback, although I much prefer to give it, as you well know. And I think that everybody benefits from feedback. One of the things that we did at Vestigo when we first founded was think about what's our culture. And one of our cultural attributes is honest feedback, direct feedback. And we give it to each other, and we give it to others. And we sometimes, I think we've learned how to do that better, to be honest, but the reality is that there's nothing like the gift of feedback to get better. So everyone can benefit from an advisor. A partnership is different. And I will say I struggled with the first, you know, year, let's call it, after I had retired from LPL and went, you know, full-time into the partnership, you know, with basically 3 other partners. So the 4 of us are equals when it comes to voting on an investment. We're equals when it comes to the day-to-day work. And I wasn't used to that. I was used to being in charge, where you kind of suggest something and people tend to do it, which is kind of nice. And I realized, you know, the value of partnership, right, and particularly in our setting, is that you benefit from everybody's ideas being fully shared. Now, you can do that in a sole proprietorship, right? Those employees who work for you can be empowered to give you feedback, but it's not quite the same as a partnership. A partnership is one where you really have to have a very honest dialogue about what's working and what's not working. So you've got to be ready for that. I don't think I could have done a partnership, 10 years ago. I just don't think my personality would have let me. But I always have benefited from an advisor or a mentor.
Yeah, that's amazing. That's amazing.
Well, I think it's just really interesting because we know that so many small business owners are going to come out of this. We know that they're going to get stronger again and they're going to grow. But one of the things that we're seeing in the small business owner community is a lot of them have really pulled back their marketing spend. And how do you recommend, or why would you recommend to share with small business owners about why that's probably the one lever in a down market to not take your foot off the pedal? Are you seeing that in your FinTech businesses?
I don't mean to interrupt you there, but it is such a great lever, right? And it's such a wonderful time to be doing marketing because the voices are down, right? The number of people who are out advertising are small. I mean, you turn in the nightly news, I'm sure, when they're advertising to you windows, right? And they're advertising to you gold investments, this is a good time to be advertising because no one else is out there. Like on Bloomberg, I'm amazed by what goes onto the Bloomberg, in terms of commercials. So number one, it's cheap. Number two, there's not others in your field who are doing it. And if you can afford to do it, I would do it. Plus, you can also do it very inexpensively. Social media has never been more powerful than getting your voice out. Finding influencers. I work with a friend who owns a rum company of all things. That's one of my favorite boards. The pay is wonderful. It's a bottle of rum. But the great thing about it is that what we see for him is he's used influencers, right? Who, believe it or not, there are people who specialize in rum, and there's a person who runs something called the Rum Diaries. Well, you can go to him, and before it might have cost you, $3,000 to get a placement on their social media work, and now it's half that number, because they just want business, right, as things go. So if you can afford it, this is a great time to be getting your message out, showing why you're differentiated, showing why you're confident. Because I've been through 4 crises, I can tell you it does get better, right? And it doesn't mean that it's not painful right now, and it doesn't mean that there aren't some really horrific things that occur, but your attitude does really matter. Right? It makes a big difference on whether you get up every day and ready to go change the world, or whether you just kind of sink back into bed and decide to put the covers over my head and not work so hard today. And marketing is kind of the same thing, right? It's about jumping out of bed and telling people that you're here, and being ready. I mean, look at how many businesses have pivoted in just the last 2 months, right? That would never have thought about doing takeout food, right? It would never have thought about selling basic groceries inside of a restaurant, would never have thought about loading groceries into your car when they're, a local market, let's say, versus somebody who uses Instacart. So there's just been incredible pivots that we can witness in small businesses and big ones that we have to draw from. That's people's creativity coming through.
Hey, Mark, back to like something like a Vestigo or any other properties that you have, and you have the partners. Obviously, you're focusing now in FinTech, but not biotech and things like that. Like, how did you give, when you assembled the partnership, is it everybody that specializes in FinTech, or is there a cross selection of the professionals and the partners there? They obviously bring different attributes to the table, but how do you get, kind of formulate all that together?
Yeah, so I'm a big believer that as a manager, you've got to get a diversity of opinion and experiences around a table. And we did definitely want to have people who had FinTech experience, let me say broadly, financial services experience. So they came from a financial services incumbent, could be banking, could be insurance, could be technology based, but they had that. And the reason we want that is because of the network they bring to us, right? They're able then to pick up the phone and call someone at an incumbent and help that startup, make a deal they might not have otherwise been able to make. So that was our first criteria. Second criteria was, when we built the team, we didn't want person A to match person B. So if somebody came from an insurance background heavily, we didn't want the second hire we made to come from an insurance background. We wanted them to come from some other aspect of financial services. And then their skill set, right? We have, one partner who's really good about strategy and kind of the big processes and just kind of a big personality in terms of networking. And that's a really good combination of somebody who is incredibly detail oriented and who's very thoughtful about, the 27 steps it takes to get something done. I wouldn't want them both to be the same way, right? Because that would cause us to potentially miss something that we get by having them be different. So I think the key to teams is the way a really great coach does it. If we use a sporting analogy, which is that they make sure they've got all the skills represented on the team, and that the member who doesn't have that skill is augmented by somebody who does.
Well, we really appreciate your time on the Shrimp Tank coming on here today. I mean, there's a lot of wisdom that large business owners can get, but definitely the smaller business owners that are growing. I wanted to ask you, for our audience in here, if you had one book that you could recommend that would be good for an entrepreneur or leader. Do you have a book that you like or an author that you like?
Yeah, my favorite book is The Hard Things by Ben Horowitz. First of all, it's the only book I've ever read that has hip hop, lyrics. It's going to be chapter, which by itself makes my wife very happy. I'm not a big hip hop fan, but she is. Want
to rap for us?
She could. But what's important about it is it's like in my generation, the 1 minute manager was kind of the thing, right? And I thought it's still a very good book. It holds itself up. But The Hard Things does a really nice job, particularly for entrepreneurs and for small to medium-sized business owners, put it all together in one place, right? Every aspect of how you have to think about your business, from funding to management of the team to difficult decisions about a partner, they're all there. And they're laid out in a really nice way, and a way to remind yourself that you're not alone in having to make those choices or decisions, and even just the practical, how do you do it? So that's the one book we recommend to every entrepreneur or others who ask us. And then we have kind of a library of books that are more meaningful across a broader set of topics. But that's
in the tech space. Do you have one area in the tech space you like more than anything now that we've just got a sort of the new norm coming at us?
Well, in tech, we coming into Fund 1, we definitely thought that we would be able to invest both in blockchain as a technology, right? So blockchain applied to lots of different businesses. We also thought we'd be able to invest in crypto as it relates to blockchain.
Right.
And we thought we'd be able to invest in artificial intelligence or big data. So now that we're almost done with the fund, right, what we would say is, turns out crypto was fine, right? We invested in 3 infrastructure companies. I think that's the right number for 20 companies in a portfolio. 3 or 4 would be about the right number. And that market's been a little less fast to develop, as I mentioned before, but that's okay. And then the area that we have not found a single business to invest in has been blockchain as a technology. We've looked at a lot, probably 50, and we came close to maybe 5 or 6, really diligenced them. But in the end, they didn't really need blockchain, or the blockchain just wasn't really the right solution for what they were doing. But boy, AI and data science, massively investable. The other 15 companies have a form of AI in them. And we think as we go forward, AI will continue to be a very real area of technology to be invested in. And then it manifests itself, as we mentioned earlier, in this area of how do you deliver your services. And there's no doubt that cloud delivery is really, the way it's happening now, and the way it certainly will be now from this point forward.
And I guess I'd be remiss not to ask one final question, considering we're talking to Boston and I'm leaving Scribner out of this. Tom Brady, will he get 10 wins in Tampa Bay or not?
You could kill me now. At least you didn't mention Gronk. Right? So, well, the one thing is Tampa is good for Tampa, right? This is going to really help their football program and create an exciting season. So in talking to friends about this, here's my conclusion, is that one is, they do a great job and they do get more than 10 wins and they go on to postseason, and who knows what happens, right? And in a lot of ways, I hope that happens. I think it was time for the Patriots to rebuild. So I view that, as painful as that might be, it's the right time for us to be rebuilding, and go forward, over the next several years. And then finally, these are not exactly young athletes, right? So it's quite easy to imagine a season that has some injuries in it, in which case this experiment for Tampa Bay won't have worked so well. But I don't want to wish that on anybody. Why ask for problems? There's plenty that get developed on their own.
All right, so I got to follow that up, Ted. You just opened up a can of worms. This will probably be our last question. So 20 companies in your portfolio, the 21st company need to hire management. Who do you put your money on, Brady or Belichick, to run the company? More valuable.
No question in my mind, I'd pick Belichick. I would highly recommend to people to see the 30 for 30 or whatever it's called. One, or maybe it's an HBO special that is Belichick and the Alabama coach. It's fantastic. And I've read, the biography of Belichick. I mean, when you live in New England, as you know, Mark, you end up reading a lot about Belichick.
Yeah.
The thing about Belichick, that what he does is he figures out how to get the very best out of an athlete, right? So he finds that one thing they do really well and just works the heck out of putting the team together in a way that takes advantage of each player's one thing they do well. And that, to me, is what great managers do. There's no doubt that Tom Brady's a fantastic athlete, and I'm sure has similar characteristics, but not really in the way, right? He's the classic player coach where, he's got to be in the middle of the action to make it happen. And really great managers fade away. You don't see them, right? You don't know quite what they're doing, but what they are doing is bringing that team together in a way that really pushes their skills to new levels. And that, for me, is what Belichick does.
Yeah, and like what you're doing, you're looking for visionary type people, not just, people who think outside the box and can, move the ball down the field.
Yeah, no, exactly. And you want them to be optimistic, right? Every day is filled with challenges. Boy, has there never been a time like this one, right? And how do we deal with it? And everyone has a bad day. I mean, this is normal. And I find myself a little forgetful. I'm not typically a forgetful person, but this is distracting. But the thing that I always come back to is humans are amazingly innovative. And the secret to life is just to keep going, right? Is you just put one foot in front of the other, and you just keep marching ahead, and eventually you get to where it is you're trying to get to. And I think sometimes it's easy when you have these overwhelming moments like we're in at the moment to just let yourself, kind of stop and wallow in it more than you should. My answer to most everything is, well, get up, brush yourself off, and move forward. You'll be fine.
So I know Ted's going to wrap this up in just a second, but for our listeners and our audience, if we'll probably put some links in this post show, but how would our listeners get a hold of you? And maybe you want to talk about, if you're interested, the foundation, if that's something you want to put out there.
Oh, thank you. So for the foundation, it's One Step Forward Educational Foundation, osffoundation.org. Always happy to have you see what Julia's doing and running the foundation and ideas or suggestions people have there. And then secondly, for the business, it's vestigoventures.com, and always welcome to send a business plan to M. Casady. And remember, Casady spelled strangely. It's Casady at vestigoventures.com. And we're always happy to see people's ideas and always happy to provide feedback.
Well, Mark, we want to thank you for coming on the program today. And for all you entrepreneurs across the country that are watching this, think about what Mark said at the end here. It could be as simple as that. No matter whether your business is struggling or it's doing well right now, just put one foot in front of the other and keep on walking, because this is a south-north game. And if you want to keep going north, you have to put that one foot forward every single day. So thanks so much for coming on the program and giving us some of your wisdom today. It just, this is amazing stuff. You can always hear a replay at shrimptankpodcast.com, and we'll put it up on all of our Apple, Google, Stitcher, SoundCloud, and everywhere around the internet. Thanks again, Mark. And thanks so much for joining us this week on the Boston Shrimp Tank.
I've been feeling like a shark in a shrimp tank. Big fish, small pond in the shrimp